Hey everyone, this is Tim Melvin of the Tim Melvin Deep Value Report and, of course, the Banking on Profits newsletter coming from you on a Monday this time down here in Central Florida. You may have noticed I am later than usual with this weekly video. It seems that yesterday we had some folks over to watch the early game, and we had the Orioles on in another room. By the time I got out of my sports coma, it was halftime of the Broncos Colts game, and was running a little too late to actually get anything done. And so we just put it off till today, and we just thought we'd shoot the video over. It's been just kind of a flat week on Wall Street. The S&P 500's up about 0.5% over the last week. Uh, cons- Geopolitical concerns weighed a little bit on global markets with the URTH ETF that tracks the MSCI All World Index. It's down about 11 tenths of 1%, so not necessarily a big move, but it is down. And our little index of little community banks, the QABA ETF, is up just about 7 tenths of 1% on the week. So just kind of business as usual. We had the beige book out last week, and there wasn't really anything in there that deviated very much from my basic theory that things are better than they were, but they're still not good yet. The economy's kind of crawling along. The job creation that we're seeing is still those lower paying part-time jobs, lots of underemployment out there, especially for some of the kids coming out of college. They're not finding what they expected, although the loan bills will unfortunately be coming in on time. And there was a lot of news in the beige book relating to the banking industry. We saw that the repair of the loan portfolios and balance sheets continues. We now have the highest equity to assets ratio. Going back many, many years, even before the credit crisis, we were running between 8.5 to 9% average equity to assets, and we're over 11 right now. For the last quarter, it was the highest in the past 2 years. So those balance sheets are just getting stronger and stronger and stronger as all those garbage loans disappear into the rearview mirror, and banks are de-risking themselves a little bit, being a little bit more cautious and building capital on the books. As obviously pretty big investors in banks, we like to see that trend. Loan demand was actually pretty good, especially across your commercial and industrial segments. A lot of your consumer, credit card, autos were absolutely on fire, and it's a very competitive environment for auto loans right now. Where we're not seeing demand, the mortgage and housing, single family housing related lending, it's fallen pretty much off a cliff. That kind of plays into what we say is going on with the housing industry. Again, better but not good, and not a boom. Now, housing is going to be a tremendous recovery at some point in time, but really this is exactly what needs to happen in the housing market. We need to bump along the bottom with very slow gains in price for an extended period of time in order to let that market clear and heal and become a healthy market. You've got no first-time buyers to speak of, dropped from over 40% of all buyers to under 25% of all buyers right now. And we're finally starting to see those institutional and cash buyers. They're full up. They've bought what they want. They're pulling back from the market at this point in time. So you could see a little bit of weakness in some of the housing sales numbers. But then again, most of my predictions are wrong. But I do think housing's not going to be quite the boom everybody was hoping for. I hope it's not. I think it would be the worst thing that could happen to the U.S. housing market is to see an explosion especially of prices anytime in the near future. Anyway, still lots of geopolitical problems in the world. There is sort of a ceasefire in the Ukraine, and by ceasefire I mean they've officially stopped shooting at each other, but the unofficial shooting's still going on. Still lots of unrest in the Mideast. The president will be addressing the nation tonight as to exactly what he's going to do about ISIS in the Middle East, and he'll outline his plans for hopefully eradicating that bunch of fellas that's causing so much problems over in that region. We'll find out what he has to say tonight. All eyes really, nobody's caring about the geopolitical stuff. They don't even really care that much about earnings at this point in time. All eyes are on the central banks. As long as interest rates stay low, companies can borrow money cheap, use it to buy back their stock. The only game in town becomes equities, so there's a forced asset allocation element that forces money into the equity market. So as long as rates are low, should continue to be a good time for general stock market investors and traders, or that's the theory anyway. In Europe, the central bank did lower rates last week. They didn't really have a choice. It was really amused by the speculation going into the ECB meeting as to what Draghi was going to do. He had no choice. If he had not bumped rates down a little bit, there would have been a severe negative market reaction. Now, Europe's got all kinds of problems. The unemployment rate in Europe, especially in that southern area, Italy, Spain, Portugal, is horrendous, over 20% in some of those nations. And even Germany's starting to slow down a little bit. Then you've got the bank stress test coming up, which could require a lot of these banks to raise more capital. Very messy situation in Europe. I love messy situations. We are scouring the ground for new opportunities, hoping that some of these European family holding companies, of which I'm an enormous fan, will come back in line with my pricing expectations, and we can get involved in those. So once I buy those, I tend to never sell them. They're protecting old family money, usually compounding between 10 and 15% a year based on net asset value. So if we can buy it at a big discount to that, we've got potential for a long-term home run in international portfolios. Then we've also got the Scottish vote that's coming in on top of the Ukraine, on top of the slow economy, and nobody knows exactly what will happen there. There's been some polls out showing that a lot of the Scottish folks are leaning towards splitting from the United Kingdom. That could throw a wrench in the works, but we have no idea what's going to happen. Just kind of hoping it doesn't make the price of Scotch whiskey go higher. That would be devastating for certainly the Melbourne economy. The big focus here is just on the lack of cheap stocks, and it's getting thinner and thinner every week. I look at the very low interest rates. I look at money coming into the market, and you talk to some of these fairly smart folks, and they're all like, the market's going to go higher. Sam Eisenstadt, who I have an enormous amount of respect for and is very accurate, he's saying we're going to go higher this year. Maybe hit that 2150 level on the S&P thereabouts. It's a nice move from here. So you attempt to say, let's get, come on, let's push it in. Let's find some stocks where we can get a little bit more invested. I can't find them. They're just not there, guys. I ran my two favorite screens this morning. One's my perfect stock screen. It's a really simple screen. Stock below book value, profitable, pays a dividend, and a sound balance sheet. That's pretty stringent criteria, I will grant you that. But usually, even in mediocre times, I can find 30 to 40 names. And, at bear market bottoms, I might find as many as 100 that fit those basic criteria. I got 14 when I ran the screen this morning, and only 6 of them traded below that 85% of book value level where I would actually be willing to jump in and get involved. And these are non-financial stocks, okay? We ran our Walter Schloss screen. And again, sound balance sheet, trading below book value, high insider ownership, sound balance sheet. 4. I got 4 stocks. I already own them all. So, I could just keep doubling down on these. Then I'm having a much more concentrated portfolio than I am usually comfortable with. So we're just going to go along. There's not a lot of cheap stocks. I'm not a market timer. I can tell you that these are abnormal conditions. They're going to correct somehow. Either Wall Street's going to come down to Main Street, or conditions will just get so much better on Main Street that economic growth will push stocks higher. I don't think that's the way it plays out. I'll sit here and be patient and wait for more bargains to be created. Been doing this almost 3 decades now. It can be very frustrating to wait, but it is always profitable to wait. So we're going to take a page from Hetty Green and Andy Beal's book. Just sit back here and wait for prices to come to us. If we can find them, we'll buy them. Right now, we're having a really hard time finding them. Now, that's everywhere except the community banks. And you knew I was coming to this, right? The community banks are still very cheap. We have plenty of community banks, small regionals, banks, thrifts, trading below 85% of book value with rock solid balance sheets. And I know we talk a lot about the consolidation wave that is starting to happen, is going to continue to happen, and is going to go on for a long time as the chief driver of price improvement among these small banks. That's very true, but it's only one of the drivers. As we talked about, both the FDIC quarterly profile and the recent Beige Book pointed to improving conditions, particularly capital ratios in the banking industry. Banks have, they've gotten rid of the bad loans. A lot of them raised capital. They cut dividends. They suspended buyback programs. They've cut costs, and they've pushed their capital ratios higher and higher and higher. And they've been very conservative with it. But now we're starting to see some of that capital get returned to us in the form of increased dividends and stock buybacks. Now, these are going to be huge drivers of price. In the new monthly banking on portfolio service, we actually have special sections devoted to both of those. Which small bank stocks are raising their dividends in a particular month, and which ones have announced new buyback programs. These are going to be an important part of higher stock prices ahead. Conditions just grinding, slowly improving, but we're seeing dividend increases. We're seeing stock buybacks. The majority of the stocks in the Banking on Profit VIP portfolio service are buying back stock below book value at this point in time, which is going to lead to a higher stock price in the future. Now, the consolidation wave is going to come into play, and these dividends and stock buybacks are actually going to play a big part in it, because as banks raise their dividend and they buy back stock under book value, it pushes their stock price higher, and it becomes more attractive, cheap currency to use to buy other banks. So we make money win-win here. If a bank is buying and acquiring other banks using its stock as currency and it's an accretive deal, that we're going to see our stock price go higher. If one of our banks gets bought out, well, we're buying at 80% of book, and the average takeover multiple is 1.4 right now and headed higher. So we'll definitely make money on those that get taken over. It's the trade of the decade. It's going to go on for a long, long time. Banks are still very cheap. If you're interested in making, what I think is going to be 7, 8, 9, 10 times your money over the next 5 to 10 years, you need to be in the small banks. Okay, say that every week. Lecture's over for this week. Let's move on to more fun stuff. My Orioles won yesterday. There's pesky Tampa Bay Devil Rays. Took 2 out of 3 from us, but we got the last game, and fortunately for us, the Kansas City Royals took care of the New York Yankees, and we're back to a 9.5 game lead in the American East with about 20 games to go. Looking pretty good. Let's hope we don't do one of those epic collapses that become part of folklore. We'll be watching closely. We're headed to Boston. We got 4 games with Boston, then we got 3 games with New York, so we'll see how this week goes. We come through this week still 9.5 games up. I feel pretty confident we'll be able to cruise right into that American League East title for the first time in a very long time, and there'll be playoff baseball in Baltimore. My future son-in-law had better come up with some tickets for me. All right, the Detroit Tigers up there. All my friends at MarketFi and Benzinger are huge Tigers fans. Their season is on the line this week. They trail Kansas City by 2, and they've got 3 in Detroit against the Kansas City Royals this week. If they get swept, their season is probably over. We'll see how that one plays out. National League, Nats and Braves. Nationals are up by, I believe, 6 games. Braves coming to town for 3. The Braves just refuse to go away. The Nationals win, the Braves win. The Nationals win, the Braves win. Braves lose, Nationals lose. So they're staying a lot closer than anybody thought they'd be able to. That could still be a pennant race. Now, unfortunately, it's really starting to look like Hank the Wonder Dog is going to be watching the playoffs at home from his owner's couch. Milwaukee really blew it this last week. They're 1-9 in their last 10 games. Cardinals just beat them up. They are now 5 games out of the lead. Probably don't have a shot at the division here. The Pirates and the Cardinals are both in front of them. They've fallen all the way back to 3rd place. They're only half a game out in the wild card, but it is the Pirates, the Cardinals, and the San Francisco Giants, all 3 very tough baseball teams with a long history of doing well in September and playing in pennant race baseball. So it's going to be very tough for Milwaukee to make up this ground, I think. And unfortunately, we're probably not going to get the great Hank the Wonder Dog playoff series that I was really hoping to see. It was a great story of the year in baseball as far as I was concerned. Football started yesterday, and now you know why preseason does not matter. The Ravens looked great in preseason. They were horrible yesterday. They played a little bit better in the second half. But if that team's going to win the division or a wild card spot, they're going to have to get a lot better between now and when they play the Pittsburgh Steelers on Thursday night. The 49ers, the Seahawks, the Broncos all looked absolutely awesome as predicted. Interestingly, San Francisco had a pretty poor preseason by all accounts. They were ready when the bell rang for the regular season yesterday. The surprise teams this week, Miami and Atlanta look like they might be the real deal. That could be real interesting. Miami took care of the Patriots, and Atlanta staged a comeback win over the New Orleans Saints, with Matt Ryan breaking some club records, throwing for over 400 yards. They could make things really interesting in their division. So that's what's going on in the National Football League. Over in college, of course, Navy held off Temple for a win. Instead of playing the big guys like Ohio State, they got back down to the schools they should be playing. I expect a strong 8-9 win season out of the Naval Academy midshipmen, and of course another Commander-in-Chief's trophy and a solid whipping of Army in the final game of the year. Notre Dame absolutely rolled Michigan, shut them out. I don't think I've ever seen that before. That will be the last time those two schools play. But Notre Dame looks like they may have a title run in them this year. We'll see as we get a little further into the schedule. Michigan State, I think, will be their first real big, is this a real football team test? And, of course, my newly adopted Florida Gators took that new offense, ran right over We Really Shouldn't Be Here University in the form of the Citadel, and beat them 65-0. We'll see how they do when they play some SEC competition next week, even if it's just Kentucky. Kentucky, normally a basketball school, they're actually, I believe, 2-0 right now, playing some pretty good football, so we'll see how that goes. Now, it's book week continuing, going on all the way now through probably Thanksgiving, as new releases, the fall releases, and the pre-holiday book release season hits the shelves. This week we've got the latest in the Jesse Stone series. That was a series started by the late Robert Parker, and a fellow named Reed Farrell Coleman will be picking up the mantle and moving forward. It's a great series with good characters. I hope he does a good job with it, because I was a real fan of the series when Mr. Parker was writing it. James Ellroy has a new book out, Perfidia, that has been very well reviewed. More of the LA kind of crime scene stuff that he's so good at. Other authors coming out this week is J.D. Robb. Ian McEwan has a new book coming out. Joseph O'Neill. And, of course, Kim Harrison has the last of the Hollows series, for those of you that are into those kind of vampire witch type books. I've got plenty of females around the house that read those types of things, and those are wildly popular books. Henry Kissinger has a new book coming out called World Order, where he takes a look at what's going on in the world, how we got here, and what might possibly unfold going forward. Kissinger still has to be considered an absolute expert on world affairs and politics, so I think that's going to be a really good read. And don't forget, Guy Spears, Education of a Value Investor. Mine's already pre-ordered. Should hit my Kindle about midnight tonight. Make sure you order yours, because I think it's going to be a fantastic book. Initial reviews look pretty good. His writings on the web and other places that I've read his stuff. This is a very smart guy. Great outlook on the markets, picking stocks, and a great writer. So this should be a fantastic book, and I'm looking forward to it. Okay, this week, what do we have? We have the Small Business Optimism Index. We'll see how the small business owners of the country feel about the world that they're operating in right now. Apple is out tomorrow with the brand new iPhone, and everybody's all excited. I could care less. They're bringing out a new iPhone. It's supposed to be the market-moving event of the week. Really? A new iPhone. Okay. But that's Apple's big announcement. The one thing I am looking forward to this week is Wilbur Ross is speaking on the global economy, what needs to happen to fix the global economy. He'll be giving that talk this week at the Japan Society. You can bet I'll be writing about it as the week goes on. Mr. Ross is one of the brighter guys and better investors on the planet. I'm always fascinated to hear what he has to say. By the way, we've tracked him in a lot of investments over the years, followed him into coal, into textiles, into auto supply parts, into all shipping last year. Tagging along on his coattails has been very profitable. I've had some wild rides in his deals, up 50%, wild equity swings, but I've never lost money if I waited and held on until the securities reached full value and he was a seller. So worth noting, Wilbur Ross is worth following, but buckle in. It's usually a wild ride. We've got China's going to tell us what they want us to think their CPI numbers were for last month. That's always entertaining. Everybody takes it so seriously. I have no faith or belief in any numbers coming out of China whatsoever, but it could move markets, so we'll take note of it and see what it is. A meeting that I don't think bodes well for anybody in the West, probably not any short-term market concerns unless they get crazy about it. But the Russian and Iranian presidents are going to sit down and have a nice chat in Shanghai later this week. I cannot imagine that chat is in anybody associated with the Wests, the United States, England, Europe, best interest. But we'll see what, if any, news comes out of that. But again, not a great sign for anybody that those two are hanging out and palling around together. And of course, we have the jobless claims. That it's going to be a little bit more important number this week, because last week's number on the jobs report was just horrific and well below what anybody expected. Now, there is a tendency for August numbers to get revised upwards, so that number might be an anomaly. But if we get a follow through with a bad jobless claims report, that could really spook some folks. And then we also have the retail sales numbers. Everybody's going to bat it around and make guesses, and it might move the markets a little bit. But, plus or minus 2% is my guess. There's not a lot of retail activity going on out there right now. So that's what's coming up for this week. I got to get back to work here on a Monday afternoon, and there's some good football coming on later. Detroit Lions are playing tonight. They're always an exciting team to watch. Probably won't make the playoffs again this year, but they are fun to watch. Stafford and Megatron can put on some fantastic plays. And, of course, I got the Orioles Red Sox later tonight. So I got to get my work done so I can watch my games. I'll talk to you guys next week.